Hello and welcome to Silent No More podcast and radio show with Dr. Monica. I am your host, Dr. Monica, and I'm so excited that you all have decided to join us today to speak up and get financed. So for the past couple of weeks, we talked about being first-time home buyers, investing in real estate, the real estate agent's purpose when it comes to purchasing your first home or investing in real estate. And so we're going to talk about financing today because you can't purchase anything without the mighty dollar, right? So I'm just going to tell y'all a little story before we get started. First of all, the person you're going to hear from is amazing. She's been my loan officer for a couple of deals that I've done. Well, for myself, not investments, but nonetheless, she's amazing. So you're going to be very well informed by all that she has to offer today. But let me tell you what happened. I was minding my own business right before the show. And I was going over the format and all the things. And I had my trusty phone. I said, let me look over the questions real quick. And realized that I just have my phone. And I can't see these words. And I realized I'm getting old. I'm an old lady and I need my readers. And I don't know which office my readers are in, either the middle school office or the high school office. I don't know. But what I do know is that I can't see. Okay. So I'm going to do my very best with these questions today. Bear with me as I lead this stage, getting you all financed for your first home or your next business venture. Either way it goes, don't mind me if I have to pull my phone out and like make the lettering and words a little larger because I have old lady eyes. Okay. So without further ado, I'm going to go ahead and introduce our guest for the hour, Miss Melanie. Hey, lady.
Hi, honey bun. How are you?
I'm well. How are you?
Wonderful, wonderful.
So how is life treating you? You're a newlywed, right?
Yes. We just celebrated our 3rd month anniversary on the 11th.
Oh, so sweet.
Yes.
So I remember last year when I had the first time home buyers workshop at Stewart Academy in Louisville, Kentucky. Yes. And your fiance at the time was there. And I said, oh, they're so cute. You're so cute. So you're married now.
Yes, we are officially married. It's still the same guy. I didn't just go on Tinder and pick a new one. It's the same one.
That's a whole show in and of itself, okay?
Yes.
New age dating, especially when you're 30, 40, 50, whatever, my age range. Guess my age. I'm not going to tell y'all, but guess. But
23.
Anyway, it's a mess out here in these streets. But Melanie has her one. She snatched her up one. And based on the pictures that I see on social media, y'all look happy.
Thank you.
So I'm happy for you.
We are. Thank you so much.
You're welcome.
If I go to jail, then you know it went sideways.
Yeah. It was his fault, everyone. Yeah. It was all him. It was all him. All right. So the title of this podcast is Speak Up and Get Financed. So tell us a little bit about your journey when you started being a finance or loan officer and how you got to the point where you are right now, because you're doing pretty big things. And I love it.
Trying to, honey, fake it till you make it. But it's funny. I initially got in this industry, 7 years ago. Yeah, I was actually trying to purchase my first house and reached out to a loan officer that my realtor at the time suggested, and I had a terrible experience. It was awful, like to communicate via email only. I felt like I was just a number. It was terrible. Let me just leave it at that.
Yikes.
So I was thinking, and at the time I was quote unquote unhappy at my previous job in my previous career. And I was like, it's time for a change. So I basically did, how people say, be the change you want to see. I said, I'm going to be the change that I want to see. I said, I'm going to be a loan officer. So literally like a week later, I emailed my now current boss, asking if I could apply for the position, sent him this really cute detailed message. You'd be so proud, Doctor. The grammar was on point. Do you?
Yes.
So I sent it to him and I I said, hey, can I apply? Blah, blah, blah. And, you know, he happily obliged. And 7 years later, here I am still working with him and doing what I love and being the exact opposite of the loan officer that encouraged me to get into the business.
All right. So I just purchased my first home about 2.5 years ago, and Melanie was my loan officer. And I had an amazing experience with Melanie. Like, I never felt that way. Never felt like I was just a number. I never felt like as if I didn't matter. None of the things happened. So thank you. I had a really good experience.
I'm so
even the
glad
last
you
one I
did.
refinanced, it was the same thing.
You're awesome. Thank you so much. That's definitely the goal. I try to keep that in mind every time I'm doing a loan. Imagine what it felt like when you were in their position. So then that's always my daily encouragement.
Absolutely. So if you're in the Kentuckiana area and you are in the business of purchasing a home, your first home, or an additional home, see Melanie. She'll give you all her information later on. All right. So what is the role of the loan officer with the purchasing process?
So think of it as, we'll say, just like I'm matching you guys. I'm matching you guys with the perfect loan for your situation. So it could be the speed dating of loans per se, because I'm going to get all my buyers' information, and with that information I determine how much they're pre-approved for, what type of loan situation would be best for them based on how much they're able to put down and credit score requirements and that kind of thing. So basically my job is basically to find a particular loan that's going to work well for their situation.
Okay, so you mentioned pre-approval. What does that mean, and why is that important to know where you are before you even start the process?
Oh my gosh,
I've heard a lot about it. I had my friend Wendy on
my list.
And she was talking about be pre-approved. You need to be pre-approved before you even contact your real estate agent, because you don't want to waste anybody's time. So let's talk about that a little bit more.
Yes. So the key thing is you definitely don't want to waste people's time. And it's not so much as wasting my time or the realtor's time. You don't want to waste your time as a borrower either, because what usually happens if you don't get pre-approved, a lot of times people will look and find the houses that they like first. And then they're like, oh my God, I love this. This is the one. It's got 27 bedrooms, 19 bathrooms, 12,000 square feet. I'm getting ready to live like LeBron. Ooh, yes. And then they're like, okay, I'm ready. What do we do? And then they have no idea what the next steps are. So then when you actually do get pre-approved and you find out, okay, you may only qualify for like a 2-bedroom, and you may live like, I don't know, your house might be the size of LeBron's closet. I don't know. But you
master suite, the master closet.
Yes, literally. So you want to get pre-approved to make sure that you know where you stand financially. You know what you're pre-approved for, so you know what your means are and what your max is. What your max is on a purchase price, or where your comfort zone is on a monthly payment. And the only way to do those things is if you get pre-approved. So then once you get pre-approved, you're not wasting your realtor's time. You're not wasting your time. You know exactly what the numbers are going to look like, and you know what purchase price and purchase range you can purchase in.
Okay. Do you remember what my max was for this last one? Don't tell them. I didn't want to know the max. I know what I asked for. Just text me, girl. Let me know.
Yes, honey. Because that definitely wasn't your max. I was just like, okay, I was going to put in whatever she put in.
How many thousands was I under with what I requested?
A lot, maybe.
50. More than that?
Yeah.
75?
Up a little bit more.
What? 100?
We'll say 6 feet.
And I tried to live beneath my means.
And
so I think the number that I requested was comfortable for me, so I can still travel, still live, still do my thing.
Yes.
But you know what?
Don't be tempted.
Girl, wait a minute. I saw a house the other day. I said, wait a minute. Don't shout me, because it took me a long time to get to a place where I could, my credit score was right, and my all the things were right. And so I'm appreciative, even though I would never go to the max.
Right.
But I'm appreciative that my max was 100,000 more than what I requested. I think I'm gonna shout once I get off here. For those who don't know what shouting is, it's when you get a quickening in your spirit from the Lord.
Yes,
Because
God.
he opened up some doors and made some ways, okay?
Mm-hmm,
That's
mm-hmm. And did.
that's what
And
that
did.
means. All right. So what do buyers need to do in order to prepare for the pre-approval process? Like their credit score, how do they need to prepare for that? Or is there anything that they need to do, when they're going through the pre-approval process?
I want to say that's a double loaded answer. And the only reason I say that is because a lot of times people want to be prepared to buy a house, essentially. Like they literally want to be ready before they come to the loan officer to apply. But sometimes what that entails is, of course, working on their credit and that kind of thing. So what they usually do is start paying things off or paying collections off or opening new credit cards or doing things that I'll say they found on Google per se. Google's not bad. Google's definitely a great tool. You just have to know how to use it and what to look for.
Mm-hmm.
But in them doing that, sometimes it can have the reverse effect on what they were originally looking to do. So I would always recommend starting with a loan officer first. Even if you're not trying to buy right now in the moment, still start with the loan officer, because what we are able to do is, one, pull your mortgage scores, because most of the credit scores that people have access to or look at for guidance is like Credit Karma, Credit Sesame, their credit cards. Those are going to be completely different from their mortgage scores. The only way to get your mortgage scores is if you pay for them on myfico.com or go through a mortgage lender. So start with a lender, because we'll be able to tell you what your mortgage scores are. And then what we also can do is, if you're not ready or if your scores aren't where we quite need them to be, we can use a credit score simulation software that basically helps determine these are the steps that the borrower needs to do. This is how long it's going to take for them to accomplish the score that they need. And then we can establish a game plan for them so that it takes the guessing game out or the guessing work out of it, for sure.
Okay. To be completely transparent, when I was about to refinance the house that I'm in now, I just purchased a car. I think it was in July, and I was trying to refinance in the spring. And my credit score dropped because of the purchase of the vehicle. And so I had to pay some things down and wait a little bit. And I was able to refinance. And that's when the interest rates were slim to none.
Honey.
So I went from like 4.85 down to 2.75.
Yes.
And I was like, I had no idea. And one of my friends, she's a real estate agent in, Kentuckiana. She said, Monica, you need to refinance. I'm like, oh, I'm fine. But when I did, and my mortgage payment went down such a substantial amount, I was like, wow, just from 2%, it went down like crazy. So right now, there are people who are in the process of looking to purchase a home. Let's say they've been pre-approved. The interest rates right now, I believe, around 6.85 something. Ash, is that, it was around that area, right?
Yeah. Well,
so, and you talked about my max a little bit. How should people, and I know this is not your space to say, because it's a person's personal preference, but how should they try to configure what their max amount should be?
Gauging on what you're comfortable with. Like, literally, what I've realized is sometimes people are either not pre-approved for the amount that they want, or they're pre-approved for way too much. So then they find that middle ground, essentially. But I would basically just, whatever you're comfortable doing. Can I make this monthly mortgage payment? As we've seen, the cost of everything has increased. So with the cost of gas going up, the cost of eggs going up, the cost of lumber, the cost of living in general going up, and no, I don't see people's incomes increasing. Can I comfortably make this payment without putting myself in a situation to where I could possibly lose something that I worked so hard to obtain?
Or be house poor.
Yes, or definitely be house poor, which I mean, nobody wants to do that either. You have the house, but then you can't actually live because you're working to pay the mortgage.
Yeah.
So just find that middle ground, that comfort range, and then just pretty much just kind of go from there. It really is personable, or personal preference, I should say.
Yeah. I remember I went to this little shindig at a very affluent neighborhood, actually Floyd Knobs, Indiana. I don't know if you're from the area, Floyd Knobs, Indiana, beautiful area, very highfalutin, very affluent. And when you went in the house, like you thought everything was going to be pristine. And there were 3 rooms on the first floor that had no furniture. Now they had nice cars in the driveway, and
Oh,
but I think they're a little house poor because they didn't have anything in the house. You know, we were in the kitchen. The kitchen was there was a table and such, but that was it. They had,
those,
so don't do that, friends. Don't be that
yes.
person that, there are homes that I want right now. They're in the $500,000 and $600,000 range. Could I do it? I could, but I may not have furniture in all my rooms. Okay. So I still want to live. So make sure, I know that some people say 30% of what you bring home, look at that amount. You should be able to live comfortably that way. But whatever you can afford. And I do know some people, they want to pour more into their home as an investment space instead of, having a 401k or investing in other areas, stocks and all those things. They would rather put more money into their home and then pull that later on, or sell the home when it's time for them to retire and downgrade. But whatever you all decide to do, just make sure that you can live after you make your mortgage payment. Okay.
Yes.
Make sure you live after you make your mortgage payment. Okay.
Let me add just a little something to that I just thought about. Something also to think about is when we pre-approve buyers, we're pre-approving you based on your gross income. Nobody ever sees their gross income. It's taxed like nobody's business. So think about that as well when you're thinking about the monthly mortgage payment, because we're going to pre-approve you based on the amount before your taxes are pulled out. But you're only going to be paying your bills out of the money after taxes are pulled out. So keep that in mind.
That's why I was approved for so much.
I'm not trying to hear it.
It makes sense.
Stop.
It all makes sense now.
I am not about to deal with you today. Nope. No.
All right. Nope. Next question. So we have a lot of people who are first-time home buyers that are probably watching. And a lot of people have questions about down payment, down payment amounts. So can we talk a little bit about what that looks like?
Yes. I think even now people are still thinking that you have to have 20% down to purchase a home. Like, I think that's still like a normal thing. It's either people think they have to put 20% down, or there's all these 10 million first-time home buyer programs available. But essentially, when we're thinking down payment so we usually have 4 traditional loan types that we usually use, which is conventional, which is a conforming loan, also known as like a Freddie Mac or Fannie Mae loan. You can put down as little as 3 to 5% down on that program. With FHA, which is a government-backed loan, the minimum down payment is going to be 3.5% down. And then for your 2 programs that don't require a down payment, it's going to be VA, no down payment requirement, but of course you have to have some affiliation with the military. And then USDA or rural housing is 100% financing, but that's limited to certain areas and certain counties, and your income can't, be a certain limit. So for people to just think about between 3 and 5% as the little numbers to kind of work with, basically.
Okay. So if you're buying, and this is like obsolete now, but $100,000 home, you would need between $3,000 and $5,000 down.
Yes.
So $200,000 is $6,000 to $10,000. So what are the qualifying expectations for the FHA versus the conventional loan?
So FHA is what we I won't even say I think an FHA loan is a good product literally for anybody. But what I've seen is a lot of lenders refer to it as a first-time home buyer loan because the down payment's 3.5%.
Okay.
But essentially, I am between the two. I'm trying to think. So, what the best way to be to explain it? Okay, so FHA, let's do it this way:
Okay.
3.5% down. Um, it score requirements are going to fluctuate. Stockton Mortgage only requires a 580 middle mortgage score for an FHA loan.
Oh, really? 580?
Yes, but let me kind of expound on that just a tiny bit.
Okay.
With that in mind, we usually require some compensating factors. And when I say compensating factors, we have to have other positive things to kind of offset the lower credit score. So
Okay.
a person who may have a 580, but they've got, 6 months reserves in the bank. And when I say reserves, that's like your monthly payment times 6. So
Okay.
they have assets available, or they've been at their job for a long period of time, or they have a lot of income, or something like that. Those are compensating factors that can help obtain an automated approval at 580.
Does that cause their interest rate to go up if their credit score is lower? Okay.
Yes. So the interest rate definitely could be a lot higher with somebody who has a 580 versus a 620 credit score, and 680 and 720. It just really just depends. But ultimately, the lower the credit score, the higher the interest rate.
Okay. I'm sorry. Go ahead.
Oh, no, you're fine. That was a good question. So then with down payment assistance programs, then the credit score changes. With KHC, we require a 620 middle mortgage score. I want to say Indiana Housing is 640 or 660. I need to double check on that one.
Okay.
But essentially, the credit score requirements can differ based on the loan program. I do want to say that because there's some confusion with this all the time, FHA does not have a score requirement. It's the lenders who create lender overlays that determine the credit score that they're comfortable with.
Okay. Because it's the lenders who are at risk.
Yes. We're lending the money. We're accepting the risk on these type of borrowers.
Okay.
Yes. Now for conventional, you could get away with as low as 680, but sometimes the same thing with the compensating factors. Usually you need a couple of those in order to get an approval at 680 versus someone who's at 740 or above and doesn't have any compensating factors. Okay. So I would say the minimum score requirements to think about would be 580, 620, and 680 as like memorable numbers, if that makes sense.
Okay. Mm-hmm. So a lot of people right now are saying, and I listen to a lot of podcasts on investing in real estate and purchasing real estate and all the things. And there are two sides to the coin. There are a lot of people that are saying this is not a good time to purchase because of the interest rates. And they're saying that eventually there's going to be the recession. So the property value is going to go down. So wait. And then on the other side, people are saying, no, this is the time to buy. And if the rates drop, just refinance. So what are your thoughts?
My thoughts are going to be definitely your second answer. Because it's hard to say. And I wish people would stop listening to naysayers per se, and listen to experts in the field. If you want to buy a house, you're going to, ask for a loan officer's expertise or a realtor's expertise. If you have a leak in your house, you're going to call a plumber and not an electrician or your friend to figure it out. So ultimately, I really feel like now is a good time. I think really any time is a good time to buy. And essentially, say for instance, if you purchased a house, we'll say 2 years ago when interest rates were amazing. Yeah, interest rates were great, but then also think about the price that you were paying for the home. I could not tell you how many times, I don't think my clients were doing it, but I've seen other people's clients who the house is $300,000 and they're putting an offer in for $350,000, $380,000. So they're paying $50,000 to $80,000 more for a home that it's worth, but they get the benefit of the lower interest rate. But now you're negative $50,000 to $80,000 in equity. So somebody would tell you it was a good time to buy then because interest rates were low, but now you're in the deficit. So current times. And then you think about now, even with interest rates being higher, this is technically the norm. I think we had that little coasting period of about 2 or 3 years and people got spoiled. But when I got in the industry 7 years ago, this was the norm. 5.75, 6%, 7%. And that's why it was a refi boom a couple years ago. So I really think any time's a good time to buy. The fact of the matter is, can I afford the monthly payment? Ultimately, no matter what the interest rate is, am I going to be comfortable making this monthly payment? And then my latest thing that I like to tell people, date the rate, marry the house, divorce the landlord. And basically what that means is it just makes it easier for people, I think, to understand, because the rate may be temporary. It may be high now, but say, for instance, if the rates go down, in a couple years, which, let me stop there before I even go any further. I don't think people realize that the rates were as low as they were is because we were going through a national crisis.
Yeah.
So while people were getting lower interest rates, we were in the middle of a pandemic. People were dying. People were losing their jobs. People were getting their homes foreclosed on, their cars repossessed. Like, there were so many negatives associated with those low interest rates. So everybody didn't get to capitalize off of that moment. So I don't want to say that I want another national crisis or pandemic to happen in order for rates to go down. But in the event that rates do go down, then you simply refinance. So you dated the rate for a little while and then you replace it with a new rate if, they go down. If rates go up, you're safe. Your rate's not going to change. So either way, you're still in a good position. You marry the house because you don't want to miss out on a house that you love, waiting for interest rates to go down, because it's not going to be available more than likely, if rates do go down and then you've missed out. And then if you choose not to and you do proceed with the purchase, fire your landlord, because the longer you wait, you're paying 100% rate on rent, no matter how you look at it. Rates could be 20%, but if you are not owning any type of properties at the moment, you are paying 100% interest rate to your landlord, and they're capitalizing off of you.
Right.
I think anytime's a good time to purchase, as long as you're comfortable with the payment and can afford to do so, because you're going to have a place to live.
Yes. So you mentioned people offering $50,000 and $80,000 over the asking price or appraisal value. Do they put all that money down, or did they put all that money down, or did the banks finance that? Certainly not.
Nope. We only finance up to the value of the home. So people were literally paying this extra money or this deficit from whatever, I don't know, secret funds they had in order to get the home.
Yeah, that I did not experience that.
And I'm so glad you did.
Yes, I actually got my house for a few $1,000s less than it was appraised for. And then not even 6 months after I purchased the house, it increased in value by like $20,000, and now it's up by like close to $80,000 in 2.5 years. And I'm just thankful. That's why I'm gonna, that's why I said earlier, don't shout me, because I think I'm gonna shout once I get off here, because I'm just thinking about all the goodness, that I've experienced when I finally stepped out on faith and purchased for myself. You know what I mean? All right. So is there anything else you would like to offer to the audience? Any other information?
I don't know. There's so much information out there. I mean, the main important thing is, I know Google's everyone's friend. I love Google, honey. Let me get a stomach bug, a company with a headache. I am on. Y'all, I got cancer. I don't understand.
It's just dry skin. It's not a rash. It's dry skin. Right. Get some good old-fashioned shea butter.
I am terrible about that. But what I tell people, like, if you are interested in buying a home, just reach out to a loan officer. Even if it's not me, reach out to someone who's an expert in the field and just ask questions. The difference about me is I'm available evening, nights, weekends, whatever the case may be. Nobody wants to be trying to figure out numbers while they're at their jobs. I'm pretty sure if people are like me, they'd rather do that on their couch watching TV, and we can get all the tea. But just ask. Just don't let the internet overwhelm you. Don't accept, misinformation. If you have questions about something, definitely ask, trust, but verify.
Yeah.
Essentially.
Yeah. So I did have analysis paralysis, like I said, whenever I looked at the interest rates. And then I just decided, you know what? I really want to get into real estate investing. I've not been shy about sharing that information to the listeners and viewers. But I had to look at the interest rate, look what I could afford, look at how I could capitalize off the home that I have now by not selling it, but renting it out and utilizing that, to help with other situations, stack that, just in case something happens with either one of the homes. And I say, this is time. It's time now to go ahead and step out. So that's what I give our audience. Don't be afraid. Don't have analysis paralysis. Check your credit score. Okay. I know everyone has Credit Karma and the credit card thing, but purchase, what is it? What'd you say it was? FICO?
MyFICO.com. And you're going to look for your mortgage scores. It's literally structured for mortgage scores. I think the scores are score model 4, 5, and 2, I believe. But it definitely says mortgage scores, and those are the scores that we use.
Okay. Make sure that you check your score and then do what you have to do to build your score. So that may be paying down on credit cards if you have credit cards. It could be paying those delinquent accounts, or what is it called when there's a discrepancy and you
dispute.
When you dispute, you can dispute some of that stuff, even if you owe it, dispute it. So it can be removed from your credit report, and that can cause your credit score to increase. I do know those scores are typically generated about once a month. So if you have, let's say, a 580, $600 credit score right now, wait another month and see what it is after you do the work, and it will work for you. But don't pay 100% to your landlord. Think about your children or the children you will have, your family, how you can capitalize on this market right now. And because one thing that I've read over and over and over is that stock markets crash, all the things happen, and every once in a while something happens to the real estate market as well. However, things normally regulate and continue to increase. So I remember when my ex-husband and I purchased our first home, I think we paid like $90-something thousand for it, maybe like in low hundreds, like 103, something like that. And now it's worth 248, right? And that was like 15, 16 years ago. But still, think about that. It's a long-term investment. So don't allow the rates right now, or not getting the house that you want right now to keep you from buying a house right now, because eventually you could sell that house, pull the equity, get you what you want, and continue to do that. That's one thing my dad told me a few months ago. He said, baby girl, buy a house, sell the house in a couple of years, buy another one. Sell the house in a couple of years, buy another one. And then you'll have a forever home until you want to downsize. I said downgrade earlier, didn't I? I meant downsize. We don't want to downgrade. We want to downsize. Downsize when you retire. You know what I mean? And so you need to start thinking like that. We as a people need to start thinking that way, because we have so much more to offer, but we have to have these opportunities to hear those experts. So we got to speak up so we can all grow together. All right?
Yes.
So thank you so much for your time.
You're welcome.
I appreciate it.
Thank you for the opportunity. This was awesome.
You are more than welcome. So how can the folks get in touch with you?
Call me, beat me if you want to reach me. Kim Possible, but let me give. I've got to give credit where it's due, because I don't want to get sued, But people can text me anytime, call me anytime. My phone number is area code 205-249-7848. And if you cannot remember that, Google Mortgages by Melanie. Remember this space, and it will lead you to me on either Instagram, Facebook. I refuse to download TikTok. I haven't gotten there yet, so won't be on there.
I struggle with it, but
See, See, I'm not ready. No. But other than that, yes, call or text me anytime. Look me up on social media. I'm always available. It'll be a great time. And that's really it.
All righty. Well, I appreciate you for your time. Folks, if you want to get in touch with me, you can go to my website at www.drmonicahunter.com. You can also email me at drmonicahunter@gmail.com and let me know what you think about this show, any topics you want to hear about, or if you want to purchase my book. You can also go to my website to do that as well. Daughter in the Shadows. Make sure you have some tissue, some popcorn. You'll be laughing, you'll be crying. You may need a drink here or there, coffee or water or soda, something strong. Wine if you need to relax, whatever. But you will enjoy it. It is a page turner, and hopefully you'll be able to connect and heal from the words that were written on the pages. So with that, I am going to sign off. I appreciate you all for your time. I want you all to have a wonderful, wonderful weekend and go be great. Yay.